Are you ready to delve into the complexities of money laundering regulations? This video explores the essential requirements set by the MLRs and EU directives for regulated firms. Let's uncover the roles and responsibilities that shape the anti-money laundering landscape. By the end of this module, you will identify your AML supervisor and their role. You will explain what it means to be a registered business under the MLRs. You will describe the 4th, 5th, and 6th EU money laundering directives. Understanding the roles of the MLCP and the MLRO is crucial. Finally, you will describe the firm's duties on vetting, training, and internal reporting. The MLR 2017 is a key piece of UK legislation to prevent money laundering. It came into force in June 2017, implementing the EU 4th directive. Amendments were made in 2020 and 2022. These changes address the 5th directive and Financial Action Task Force recommendations. The regulations require firms to combat financial crime actively. The MLRs apply to firms in the regulated sector, including financial institutions. This includes banks, e-money services, auditors, and legal professionals. Other sectors include estate agents, high-value dealers, and casinos. Art market participants and crypto asset providers are also covered. Compliance is mandatory for all specified activities. Every firm must know its AML supervisor. In the UK, there are 25 AML supervisors. These include the FCA, HMRC, and the Gambling Commission. Professional body supervisors are overseen by OPBAS. Knowing your supervisor is crucial for compliance. The FCA supervises banks, investment firms, and crypto businesses. HMRC oversees accountancy services, estate agents, and high-value dealers. The Gambling Commission supervises casinos. The SRA manages solicitors and law firms in England and Wales. Each supervisor has a specific sector under their jurisdiction. Supervisors register and approve beneficial owners. They supervise firms on a risk-sensitive basis. Guidance, policies, and sector expectations are issued by them. They inspect firms through reviews and visits. Enforcement actions, including fines, are within their purview. Firms in the regulated sector must register with their supervisor. Estate agents and money service businesses register with HMRC. Crypto asset providers must register with the FCA. Trading without registration is a criminal offense. Registration ensures compliance with AML regulations. Registration begins with an application and fee. Supervisors assess the fitness of business owners. Criminal and credit checks are standard. Firms must notify supervisors of changes within 30 days. This process ensures ongoing compliance with AML standards. The fit and proper test is crucial for registration. Disqualifications include convictions for money laundering. Penalties under MLR 2017 must be fully paid. Dishonesty convictions and disqualification orders are barriers. This test ensures integrity in financial roles. The EU directives form the basis of UK AML law. The UK has transposed the 4th and 5th directives. The 6th directive aligns with existing UK laws. Post-Brexit, UK rules align with EU standards. These directives address various aspects of money laundering. The 4th directive introduced a risk-based approach. Firms must conduct documented risk assessments. The People with Significant Control Register was established. Domestic PEPs were included in the PEP definition. Non-compliance penalties were increased significantly. The 5th directive expanded AML scope significantly. Crypto asset businesses were included in the regulated sector. Transparency of beneficial ownership was increased. Rules on prepaid cards and PEPs were tightened. This directive responded to terrorist attacks and the Panama Papers. Crypto asset providers must register with the FCA. Art market participants dealing in high-value items are regulated. Letting agents with high monthly rent are included. Enhanced due diligence is required for high-risk countries. Public access to the PSC register is mandatory. The fifth directive captured crypto assets for AML. Firms must register with the FCA and comply with MLR 2017. Full customer due diligence is required. Suspicious activity reports must be filed for transactions. The FCA has refused many applications for inadequate controls. The sixth directive harmonizes money laundering offenses. It extends criminal liability to legal persons. The UK opted out of full transposition, citing existing laws. Firms must understand the directive for cross-border transactions. It enhances cooperation between EU law enforcement. The MLCP is responsible for MLR 2017 compliance. They approve risk assessments and policies. The MLCP ensures the MLRO has necessary resources. They report AML risks and issues to the board. Smaller firms may be exempt from appointing a separate MLCP. The MLRO handles suspicious activity reports. They decide if reports should be submitted to the NCA. The MLRO acts as the firm's AML contact. They produce annual reports on SAR activity. Keeping records for at least 5 years is mandatory. This is the conclusion of the video. The MLR 2017 sets the foundation for AML compliance. Supervisors and directives guide regulated firms. Understanding roles and registration is crucial. Effective compliance involves vetting, training, and reporting. This knowledge equips you to navigate the AML landscape. If anything is unclear or you need help, WhatsApp us at 0748436168. Our team will gladly assist. Thanks for your time, and see you at the next session.